Good morning. I'm Pete Najarian. This is The Take for Market Rebellion on this Monday morning, on this red Monday morning. Some serious pressure being applied to the markets right now as we speak. And as a matter of fact, some of that is a lead in from the triple witching of last week on Friday. We had a market that was hanging in there pretty decent. However, the NASDAQ did have some pressure early on in the mornings. We were talking about down maybe as much as 90 points. And it was some of the familiar names that have been leading the upside. It was Apple. It was Amazon. It was Microsoft. It was Google. So those names with a little bit of pressure, nothing huge, but definitely feeling some of the pressures of the day in the market. And it was a very volatile session, as a matter of fact. And with that volatility came volume. And the volume, once again, exceeding 30 million. As a matter of fact, Friday, 37.4 million contracts trading. That was a big day on Friday. And some of that makes some sense. Obviously, I did mention triple witching and all, but a lot of the participation just continues to flow. And we've been watching these flows start to gain to the upside once again. And so certainly that did stand out. Now, we watched the financials on Friday actually start to move and perk up a little bit, move towards 25, only to fade at the end of the day. We saw that the case in a lot of the different indices as there was some serious pressure later on in the session. You had a volatility index that was trading call it between 26 and 28, actually closing out at 26. So not too terrible considering the fact that the Dow started to really get pushed on later in the day, finishing down about 240 or 50 points. It was dragged by Boeing and 3M and Apple and Microsoft. There's some positives there as well, though. Healthcare looked pretty good during the session. You had United Health and J&J and Merck all closed in the green, but the overwhelming push to the downside, industrials, and obviously I mentioned some of those various tech names as well. That was pushing the markets down. Now, what was really in control of the NASDAQ? Well, again, a little bit of concerns out there. The airlines, a little bit murky looking. As a matter of fact, American and United both pushed to the downside. Add in the hotel and some of those travel services, the bookings, Expedia and those, and the cruise ships, and you can see what I'm talking about. It accelerated that push to the downside. As a matter of fact, NASDAQ actually being down about 90 points, but finished down on the day, over 110 points on the day. And the financials, again, disturbing that they've had the time frame to continue to try to move to the upside and just can't do it. Can't put back to back days in that move to the upside. And we keep talking about in the XLF, look at that 25 level. And I've brought this up time and time again. Look at JPM and that $100 level. It has a very difficult time sustaining over that level. Citi's been a disaster. That has not been trading well. Obviously, we already know about Wells Fargo. So the financials, definitely a disappointment. And every time we start to see maybe there's a little something there, they disappoint us once again. And that has certainly become a theme that we have been watching throughout 2020, but particularly lately, every time we've had the opportunity to watch some of these moves to the upside. And is there going to be follow-up? And there just has not been. So the worry factor coming in again today, and the worry factor about coronavirus, what's going on in Europe, and a lot of those different political uncertainty, all of that really pressuring the markets today. As a matter of fact, down 500 early at the pre-market, down about 2%, call it. NASDAQ was down about 200 points, call it 2% or very close to 2% as well. And a lot of that pressure really coming from the reopening stocks because the concerns of how are we going to be reopening and are we going to see another wave? And that certainly is the landscape that everybody is trying to navigate with. And as they do, we are seeing some huge pressure on the market today. I talked about on Friday, being down about 245 points on the Dow, 200 points or 100 plus points on the NASDAQ. Well, this morning, down about 200 points on the NASDAQ. That continues to the downside. It's down about 125 now. I'm looking at the Dow down close to 600 points. It's been down over 600 points early. We're only 30 minutes into the trading session. By the way, Oracle, we're still talking about TikTok and Oracle, Walmart, and all those different factors. So there are some names out there that are actually flirting in the green. There's no doubt about that. Apple, as a matter of fact, had made one big, nice push back up early on the first half hour or so to get into the green and then failed and then pushed right back down again as we are down once again 600 points. Volatility right out of the gate, bang, a big pop. And we got up and over that 30 level where we hadn't seen that in a while, but it was not sustained very long. And then we pulled back fairly substantially quick, actually. But now, because of the fact that we are slipping, I'm looking at the volatility index now back around 29.5. So we were up over 30, and now here we are back towards 29.5 again after pulling back significantly. When you look and you say, well, what really stands out? What stands out is that everything is getting some pressure right now. Financials down about 2%. I show energy down about 4%. The beta names in energy, that OIH, down about 6% right now. Technology names down generally, call it 2%. Healthcare, 2.25%. Industrials, 2.5%. Chips down 2.25%. Everything with a little bit of that push, and everything kind of equally pushing to the downside for the most part, outside of energy, which we all know just gets whacked around, just seems like constantly. But there are some names that are in the positive. Take a look at Tesla. Well, some of that might be because of Nikola, but take a look at Tesla pushing towards that 450 number once again. And you know what? The pressure is on, as I said, those reopening stocks. Look at some of these airlines. Look at the cruise ships and also the hotels. Names like Marriott and Wynn, but American, Delta, United, all in the red in a pretty substantial way. As a matter of fact, when I looked over at the Dow, the only positive stock, or at least this was just minutes ago, was Walmart. That was the only name out of the 30 that was in the green. Everything else, as a matter of fact, you want to know what was down about 3% or more? Caterpillar, JP Morgan, Chevron, Honeywell, United Health, American Express, all down 3% or more on the day in this first 30 minutes of the trading session. So a lot of pressure being applied, a lot of this about the reopening. And one last thing I'll point out, we have been seeing since September started, we have seen 7 unusual option effects hitting our screens. And of those 7, 5 have been on the bearish side. So some serious moves and some serious volumes too. I just wanted to point this out to you. So this past Thursday, 26,000 October of the 330 puts. And a lot of these are spreads, which is very, very smart to put off some of that implied volatility that's factored in and putting off spreads. So, but I'm just going to read off where they were actually buying, and they were spreading off selling a lower strike, but buying the October 23rd, the 333 puts on Thursday. As a matter of fact, they bought 35,000 Wednesday of the October 30th 260 puts. So those will make you scratch your head a little bit based upon where the S&P was and where the spider was. So to see those big volumes and multiple other hits, as a matter of fact, this morning, we're even seeing a hit in there where they're buying the put spreads once again in the spider. So that's something that's a little bit disturbing. And now we have dropped again. I'm just going to give you a quick update. As a matter of fact, I'm going to have to run. I will maybe be able to shoot you an unusual later on, but we were seeing some positive paper actually coming into Zoom just minutes ago. But we're going to hold off on that for a second. We are now down very close to 700 points, almost down 200 points on the NASDAQ as well. S&P down about 70 points, and that volatility index steadily kind of moving towards that 30 number. Folks, you got to understand, there are so many different ways that you can use the derivatives markets in a positive way in terms of hedging, in terms of all types of different strategies to move around and reduce risk. And that's something that in a market like we're seeing right now, we've got the volumes. We now are having a little bit more volatility as we push towards 30. And you have to understand that. If you do not understand that, you don't just jump in and just try it as you go. You have to have that education. Our guys at Market Rebellion are the very best. You're going to want to check them out. I think they are the very best in the industry, and there's no doubt about that in my mind. So as you approach today, think about that. Think about Market Rebellion, and obviously we'll be firing out some of that unusual option activity that we have been seeing early on. As a matter of fact, maybe I'll even tweet some of that out. But I will tell you this, not on the halftime report today. I will be on Tuesday. That's why I still get to wear the casual wear. But it's going to be a rocky road. Be patient, be smart, and always be disciplined. Those are the keys to trying to navigate your way through these very, very difficult markets. And discipline is a huge factor. You have to understand, entering something, you already know how you're going to exit, either when it's positive or negative, but you already have a strategy in front of you as you approach each and every trade. And we talk about that all the time. Our great mentors that we've got, and some of these people, men and women, they fully understand that, and they'll give you the best monitoring of how we try to do that the best way we can. And hopefully that's something that works for you as well. Folks, have a great day of trading. I talked about unusual option activity. I had to come back at you. So here it is. We're going to tag this on to the take, as a matter of fact. I was just looking as we got done, and I wanted to get this out there right away. So GLD, a lot of different things hitting right now, but I'm going to give you GLD, and it makes a little bit of sense to me. So When you look at where that's trading right now, it's just underneath 180. It's 179.55. And we got a buyer of 5,000 of the June going all the way out, 2021. The June calls, the 235s. So they are buying a lot of time for GLD to produce. And it's going to have to make up a lot of ground because it's under 180 and these are the 235s. Those are going for about 250. And open interest was about 2,000. So here we are. There's another 5,000 being added to that. A buyer of those things. They're the June 235s. Interesting trade. It's something that, I was looking and I was noticing that in the commodity space, a lot of pressure there as well. Gold down, silver down, oil down, everything it seems like getting pushed down. And you just wonder, when you see that, is somebody going to step up and not go with the herd, but actually go against the herd? And this is what we are seeing here. So this GLD unusual is definitely something that stands out. I know it's way out in time, so that might be distracting, but there's a lot of different ways to kind of view this. And I thought this one stood out to me as fairly unusual. And we have not seen nearly as much SLV or GLD over the last couple of weeks. So the fact that this is hitting today is something that did stand out. Folks, have a great day of trading.